All right, let's dive right into this explainer. Today, we're unpacking the absolute gauntlet that is the Canadian finance and tax law landscape. We are going to look at everything from the incredibly grueling certification process to the absolute minefield of real-world survival in commodity and tax law. So if you've ever wondered why accountants and tax practitioners seem so obsessively meticulous, well, you're about to find out exactly why. Let's start things off with a pretty provocative question. What does it actually take to navigate a landscape where examiners and tax auditors show absolutely no mercy? Honestly, it takes a very specific, almost hyper-vigilant mindset, one that's forged in one of the most demanding professional examinations in the world, and then tested in a legal environment that is notoriously unforgiving.
Section 1. The Ultimate Accounting Test, the CPA Common Final Examination.
This exam is an absolute marathon spread over 3 grueling days. Day 1 is all about high-level strategic analysis and professional skills. Then comes Day 2, which drops candidates straight into a relentless 5-hour case study where they have to prove profound technical depth in a specific role, like taxation or assurance. And Day 3, that's a time-constrained sprint across multiple cases to prove breadth across all core competency areas. It is intense. And passing isn't just about getting a certain percentage. There are 4 distinct levels a candidate must clear just to get their foot in the door. Level 1 demands overall sufficiency. Level 2 requires depth in core accounting. Level 3 tests their specific role depth, and Level 4 ensures they have broad knowledge across the whole spectrum. Actually, scratch that. It's more like a series of tripwires. Because if you fail even a single level, you fail the entire exam. No exceptions. Section 2. Common Exam Pitfalls, where candidates go wrong. Every single assessment opportunity on the CFE basically boils down to answering this one fundamental question. The Board of Examiners isn't looking for someone who can just regurgitate a textbook. They are looking for applied judgment. They really want to see how a candidate thinks and reacts when they're thrown into the deep end of a messy, ambiguous business scenario. You'd be amazed at the shortcuts people try to take under pressure. Candidates fail when they skip the really difficult technical issues just to save time, or when they use extreme point form that totally obscures their logic. Some provide super generic advice or, incredibly, even contradict the authoritative facts of the case. As the examiners point out over and over, you cannot just state a fact. You have to explain the why or the so what. If you don't connect those dots, you simply don't pass. A massive blind spot identified by the examiners is a lack of professional skepticism. For instance, in one exam simulation, candidates completely missed a glaring hidden conflict of interest. There was a COO named Andy who told his team to ignore a crack in a building's foundation. The hidden clue? That building was constructed by a company where Andy himself served on the board of directors. So many candidates just read right past this. But a competent CPA, they have to see those red flags and act on them. Moving on to Section 3, Real-World Tax Traps. Welcome to the Wild, Wild West. Now, out in the real world, things get even more intense. Shoot first, ask questions later. That quote perfectly captures the highly aggressive policy of the Ontario Ministry of Finance. According to our sources, they are known to assess massive 25% penalties without what's called mens rea, which means even if you had absolutely zero guilty intent or intention to deceive, you still get hammered with the penalty. They've even been known to use criminal investigation referrals as a civil deterrent. Because, nothing quite spices up an audit like the casual threat of prison time. You might logically assume that tax rules are pretty consistent across the board, right? Nope, that is a fatal trap. For income tax, the government carefully distinguishes between finance and operating leases, and they allow for clean corporate rollovers. But for GST, the Canada Revenue Agency literally says a lease is a lease, period. And for Ontario retail sales tax, rolling over assets between related companies without triggering taxes requires an incredibly strict 95% wholly owned control structure. Make one wrong assumption here, and boom, you trigger a massive, totally unexpected tax bill. Section 4, E-commerce and leasing rules, the traps of modern transactions. Let's look at the Extendicare case, which plays out like a fascinating legal thriller. Imagine breaking a commercial lease and having to pay heavy damages just to forestall a massive lawsuit from your landlord. The question is, does the government get to charge retail sales tax on those penalty damages? Historically, Ontario said yes, absolutely. But the lessee fought back and finally convinced the Court of Appeal that these payments were made to buy off a lawsuit, not to consume tangible property. It was a huge win, but it really highlights how aggressively the province tries to tax every single dollar moving in a lease dispute. And here is a massive, highly disruptive trap if you're in e-commerce or IT. Ontario changed its rules to deem computer software to be tangible personal property, or TPP. Because of how the law is written, any service performed on TPP is also taxable. This meant that pure computer consulting services suddenly became fully taxable overnight. IT businesses were caught completely off guard, and many found themselves on the hook for years of back taxes plus interest. Honestly, e-commerce as a whole is just an absolute minefield for classification. You have to ask, is your digital product a service, a telecommunication, or an intangible asset? If you mischaracterize a transaction, say you treat access to a proprietary database as a telecommunication service instead of an intangible, you could find yourself violating the incredibly complex place of supply rules for both provincial and federal taxes. And when companies bundle their fees, it just blurs the lines even further, making those businesses prime, easy targets for auditors. Finally, Section 5, Surviving the Financial Wilderness, Non-Residents and the GST Trap. So, picture a very common scenario. A non-resident business starts selling into Canada, they get totally confused by the tax rules, so they just blindly register for the GST, thinking it's a safe bet or a quick self-help fix to avoid trouble. But is that actually a safe bet? The answer is absolutely not. Once registered, non-residents unknowingly trigger positive collection obligations, meaning they are now legally forced to act as the Canadian government's tax collector. Look at the famous Toyota 2 showcase. It proves that even giant international corporations can stumble into a total nightmare. They ended up in this bizarre situation where their Canadian customers were paying tax at the border, but because the company itself was registered, they were also supposed to be collecting a different division of GST on the same sale, double tax. And get this, even though they sought advice from the government and top accounting firms, the court still penalized them for not getting a precise, focused opinion. So, bringing it all together, when you look at these real-world traps, from the aggressively punitive auditors to the hidden complexities of digital taxation and non-resident nightmares, it all makes perfect sense. That grueling CPA exam we started off talking about, it isn't just some academic hurdle. It is a precise, exact simulation of the relentless, unforgiving reality of practicing tax and finance in Canada. If you miss a tiny detail on the exam, you fail. If you miss a tiny detail in reality, it can cost millions. Which brings us to the end of our explainer. I want to leave you with this final thought to ponder. Knowing all these hidden pitfalls, the strict definitions, and the absolute demand for professional skepticism, would your own business and financial practices survive a full audit by these gatekeepers? Think about it. Thanks for joining me, and keep questioning the details.